As India's beleaguered rupee plunged to a record low of 65 against the dollar, market analysts in the country on Thursday said government policies have held the country's economy back. Investor confidence has faded amid fears over the rising cost of funding India's current account deficit, forcing New Delhi to delay plans to raise funds through partial privatizations. Hit by the U.S. Federal Reserve's preparations to wind down monetary stimulus, which is driving up borrowing costs globally, India's rupee has lost 17% since May.
So this is bound to happen because corrective measures were never taken in the first place. So I think the decisions which were supposed to take in 2008, 2009, we kept on postponing, and finally it culminated into a point where it is resulting into irreparable damage.
The collapse of the rupee is derailing India's hopes of raising more than $6 billion from the sale of stakes in state-run firms. Indian Finance Minister Palaniappan Chidambaram announced in February a target of $6.2 billion through partial sell-offs in efforts to reduce the fiscal deficit to 4.8% of GDP.
Thanks to the global slowdown, as well as some domestic factors, the Indian economy is challenged. In the last 12 months, the government has taken a number of measures to contain inflation and to revive investment and growth. Some results are visible, yet there are many challenges that have to be overcome.
Market analyst Sunil Shah says the tremors of the U.S. announcement about money stimulus in the form of bond purchases were echoing through the emerging market world.
So it's a negative news for not only India but overall emerging markets, because then the liquidity will dry up, and basically as far as India is concerned, the capital flow, incoming capital flow always bridge our trade deficit, current account deficit. So this is going to be a problem, and that's the reason that we have witnessed the fall in rupee vis-a-vis dollar.
In this fiscal year, which began in April, the government has so far raised over $200 million by selling stakes in 7 companies. Now the government could expect to raise just $2 billion jointly from the sales of Coal India and Indian Oil Corporation stakes, given current market valuations.